Thank you for joining us. I wanted to remind you about some information that came out from USDA. They did have their crop progress report yesterday. They also had a crop condition report. And this time of year, that usually means the winter wheat condition. Let's take a look at what the numbers were for the winter wheat crop as of Sunday. So on Sunday, when USDA went out and measured their crop, this is what they got for their ratings in the plains, where there is a lot of winter wheat produced. So Texas came in at 51% good to excellent. That was actually an increase of 1 point from last week. However, Oklahoma went down 8 percentage points to 56% good to excellent. We had Kansas dropping 4 points to 38%, and we had Nebraska staying unchanged at 67%. Oddly enough, we had South Dakota actually gaining 12 percentage points last week, up to 78% good to excellent. That was quite a switch. Now, we do have the crop report, the crop production report, coming out here in about 45 minutes from right now from USDA. And for the corn production, the trade is expecting them to say we'll have 15.61 billion bushels this year. And soybean production, they're expecting to be about 4.12 billion bushels. That's what the trade is guessing. When it comes to ending stocks for the U.S., for 2020 and 2021, they're looking at corn at 3.4 billion bushels. Man, that's a big number. Soybeans, 452 million, and the wheat at 821 million. So that's kind of what the trade is focusing on right now. I want to go take a look at our current futures trade, and in the corn market ahead of the report here, we've had quite a bit of weakness today. We have July corn down 2 3/4 at 315 3/4. In the soybean market, we're down 3 at 852 per bushel. And in the Chicago wheat right now, you have your July down 4 3/4. We're at 512.5 per bushel. Kansas City, the hard red winter wheat, down 3 3/4 at 471 1/4. That's on that July contract, of course. And Minneapolis spring wheat trade is down 3 at 515 3/4 on the July contract there. And for good measure on that cotton market, we currently have the July up 52 points, but December down 35 at 57.28 at this point. And in the canola trade, we have the July contract $1.50 higher in Canadian currency. It's at 472.80 per metric ton. Brian Hoops joins us now. And Brian, when that report comes out here at the top of the hour, do you think the production number will be the first thing most people look at, or do you think they're going to look at ending stocks?
I think a lot of the eyes will go towards that ending stocks category, Marlon. What we're going to do for production numbers is use pretty much trendline yields. We're in at a very fast pace so far anyway, slowing down a little bit this week with a lot of rain, but the trade is looking ahead towards the end of the month and anticipating this crop's going to get seeded. We're going to have much warmer temperatures and abundance of moisture. And so I'm feeling the USDA is going to say our yield potential is going to be there. Eyes are going to go towards that ending stocks number and see what the USDA does with not only ethanol demand or the lack of demand that we have, but also what do they do with China's purchases. They are well behind where they need to be at this point in time for old crop to meet their phase 1 trade agreements. If the USDA still believes there's a chance that they're going to come in late in the year and do some buying, such as they're starting to do now, they may leave that export forecast unchanged. Otherwise, they need to drop their soybean exports down to meet with the pace that we're currently on. And some bad news from a standpoint of historical new crop corn ending stocks have come in above this forecast by the end of the growing season in 4 out of the last 5 years. And for soybeans, it's been 3 out of the last 4 years, with last year being that exception.
Oh, okay. Well, thanks for pointing out the trends there. We'll come back in a moment and we'll pick apart what's going on in our livestock trade. All morning long, we've seen some spread trading. We'll see if that's still happening when we come back. I mentioned this morning we have seemed to have the appearance of having bull spreading in this entire livestock complex. It's been going on all morning, and let's see if it's continuing at this point. On the live cattle board, well, things have taken off to the upside all across the board, but still it's being led by the nearby contracts. So apparently that is still the case. So we have June live cattle now suddenly $2.35 higher at 95.02. And this is after we printed a low of 93.15 after the open this morning. So dramatic turnaround there. Now the August is up $1.22 at 98.42. However, October has turned lower by a nickel. Just a couple seconds ago, we had some of these contracts were higher on the deferreds, and now they've turned lower again. Let's take a look at the feeder cattle market, see what it's up to here. Currently, the nearby May up $1.42 at 125.07, and you have the August gaining 85 cents. We're at 133.52. All the deferreds are higher now, about 70 to 90 cents or so. So that's kind of interesting. Things firming up at the present time. Meanwhile, on the lean hogs, we still have the nearbys higher. We have May up $1.57 at 67.90. The June contract 20 cents higher at 60.47. And again, the deferreds are lower. July down 30 cents and the August and October over 40 lower. So let's go back to Brian Hoops. Brian, I just wondered on the cattle market here, are you hearing any rumblings about any cash cattle trade yet today?
You know, there's been a little bit of trade leaking out, Marlon. In the north, in Iowa specifically, a 185 is being paid, and there's also a little 115 in Nebraska. But again, these are just handful deals, not anything that I would consider making the market, but it is enough to kind of stimulate the futures once again. Trade, I think, was expecting lower cash trade or at least a pullback from where we were last week, and this is giving a stimulus to the front month cattle.
I noted earlier where we had some weakness in the U.S. dollar value, and let's take a look at what the index is doing right now. We are dropping even more right now. We're down 520 points on the June futures. It now stands, excuse me, at 99.735, at least on the dollar index value. And then on the Dow this morning, we had just slight gains to look at. We're hanging in there. We're about 69 points higher at 24,193. Didn't know if that was really supportive to the trade at all or not here, Brian, in your opinion. By the way, the crude oil market has been higher today, too, about $1.25 higher on the June. So any influence from these outside markets on livestock or grain?
Yeah, you know, the higher crude is some news that OPEC wants to continue those production cuts into the summer months, and that is going to be supportive, and that would be really what we need to see to get prices moving higher, increase our ethanol demand for our corn products, and get some of those ethanol plants back up and running. Absolutely.
Okay, well, thank you, Brian, for the time. Brian Hoops, the president of Midwest Market Solutions. He hails from Springfield, Missouri. Christina, with that, I'll turn it back to you.